Stop writing, please. You write afterwards. You write afterwards. Good morning. We continue with depreciation of assets. Today we're going into maximum amount of depreciation. When we talk about maximum amount of depreciation, we're simply talking about the highest amount we can charge on an asset. And the highest amount we can charge on an asset is the cost price of that asset. So if you have purchased an asset for 5,000, the highest amount you can charge on depreciation is still 5,000. You can't charge more than that. So the highest amount of money you can charge on the asset is the historic cost. Historic cost of that asset. Do you get what maximum amount means now? Maximum amount of depreciation. So the maximum amount you can charge on an asset is the cost price of that asset. You can't sell an asset more than the cost price, can you? Because it's depreciating. Remember, depreciation is the wear and tear of an asset. So as soon as you start using an asset, the value starts dropping. So which simply means if you are purchasing a new vehicle today, a new car today, you might not be able to sell it as the price you purchased it today. Do you understand the point we're making here? You purchase a new car now. After today, you cannot sell it more than that price because it's not considered new anymore. Do we get it? So maximum, do we get it or not, please? Please, whatever I say that you don't understand, this is your time to ask. Not in the exam hall, I will not be there. Like I'm not always going to be there. I think I was even there a bit this semester, last semester, but now you won't even see me at all. Yes?
This is easier to see onto the exam.
Why are you asking about that? What matters is you concentrating here. I don't know how easy or difficult it is. What I need from you is maximum concentration on maximum amount of depreciation. Do you get that? So the maximum depreciation that can be charged on an asset is the historic cost of that asset, which is the cost price. Do we understand that? Good. So we have a question already. Flanagan Finance DAC purchased a new computer system at a cost of 30,000. The firm's depreciation policy is 25% per annum using straight line method. Using straight line method. Required, show the depreciation charge that Flanagan Finance DAC will charge against profits on this machine for years 1 to 5. Why do we even charge depreciation? Without depreciation, we will be overstating our profit. Overstating the profit. And this does not go in line with the principle of accrual. Accrual matching concept. Your profit should be matched against your expenses. Because if you don't match your profit against your expenses, you'll be thinking you're making more profit, forgetting that the equipment, the machines that you are using to make this profit are reducing in terms of what they can do. Are you getting why we have depreciation here? So we charge depreciation on profit so that we can always remember that the assets we use continue to lose their value too. As they are working, they are losing value. As we're making profit, we should always make an amount available for maintenance. So we won't think, oh, the machine is going to work the same way for the last 5 years. No. A new machine, yes. After 2, 3, 4 years, the machine will start depreciating. So which simply means either you spend more on the machine for maintenance or the machine gives you less than what it used to give to you. Do you understand why we're charging depreciation now? Yes. Depreciation is charged because the equipment, the assets, the non-current assets that we're using will start losing value over time. So they might not be able to give us the same output continuously for the next 5 years. So you should put in mind that every year that passes by, this machine is losing its value for this amount, for this amount, for this amount. So that amount will be taken away every year that you make profits. Until the profit is, the depreciation charge is zero. When it is zero, that means you cannot charge profit on it. Do you get the point I'm making here? In as much as the machine is still making in as much as the business is still making profit with the use of the machine, the business must always account or charge depreciation on the profit. Thank you. The business must always charge depreciation on the profit. so that it will not overstate its profit. When you overstate your profit, you think you have more profit, not knowing that you don't have more. Because you have to remember that you are using an equipment that will always depreciate over time. Do we understand maximum depreciation here? Any question up to now?
I don't understand.
You don't understand? Good, I'm going to explain further. The topic is about maximum amount of depreciation. Why do we have the maximum amount of depreciation? Simply means the highest amount we can charge on an asset. The highest amount you can charge on an asset is the historic cost, which is the cost price. I bought it for 5. The highest amount I can charge on it is still 5. I cannot charge 6 on it because as soon as I purchase it, I start using it. This is not the same as you buying something you want to sell. This is not stock. This is not current asset, it is non-current asset. Which simply means whatever you purchase, you want to use it. Just like my laptop. I purchased it. As soon as I purchase it, I start using it. I cannot sell it more than the amount I bought it. Because I didn't buy it for sale. That is purchases. But here, I'm buying it for use. That is an asset. If I bought it to sell, that will be recorded in my statement of profit or loss account. But I purchased it for use. It will be recorded in my statement of financial position. So which is what? A non-current asset. So depreciation must be charged on every non-current asset because non-current assets will start depreciating over time. They start losing their value. So no matter how, the highest you could sell it is the amount you purchase it. You can't sell it more than that because you are using it. Do you get it now or not? So for maximum amount of depreciation, the maximum depreciation that can be charged on an asset is the cost price. The amount you purchase it. Because you are not selling it, you didn't buy it to sell. If it was to sell, it is purchases, not assets. That is purchases. You bought, you cost price minus your selling price, you make profit. That is on purchases. But here, we're talking about the asset, the non-current asset used by the business. So the maximum amount you can charge on it is the cost price. Do we get it? Any question up to now? Good. Are you here? You're not. You better be here. Now we have a question. Financial Finance Agency purchased a new computer system at a cost of 30,000 euros. The firm's depreciation policy is 25% per annum using straight line method. Remember, for straight line method, the amount charged on depreciation will be constant all through the years. The amount charged on depreciation will be what? Constant all through the year. That is why it is straight line method. But for reducing balancing method, the amount charged will change, will vary every year in, year out. So the question says we should use straight line method. Now this has shown the depreciation charge that finance that DSC will charge against profit on this machine for years 1 to 5. So we start. Solution. We have 30,000, the cost of the historic cost. The cost of the machine is 30,000 euros, right? Yes or no, please? Yes. Depreciation to be charged 25% on this, right? So we have 30,000 euros multiplied by 25 over 100, 0, 0, 0, 0. This 300 multiplied by 25, that's 7,005, right? Please confirm that. Yeah. 7,005. So this is the amount we're going to charge on depreciation for each year that passes by. So our year 1 is what? 7,500. Year 2, 7,500. Year 3, 7,500. Year 4, 7,500. 15,000. 15,000. That is 30,000. That's the cost of the asset. Yes or no? So it simply means in year 5, it is what? 0. We can't charge depreciation on year 0. So the profit, the depreciation we can charge on the profit will end after year 4. During year 4, sorry. Because we don't make profit, there is no depreciation. This is years, it's going to give us 0. So how do you charge depreciation on an asset that is, the economic life is done? That means the asset, the economic life is what? Done. You can't charge the profit on it. You can't charge depreciation on it for the profit made. Do we understand? And you don't get it. The question says, show the depreciation charge that Finnegan Finance DSC will charge against profit. In year one, whatever profit Finnegan make is going to charge 7,500 on depreciation. Depreciation is part of your revenue or expenses, yes or no? Remember your profit or loss account. You have the gross profit, then you less overheads. I'll come please. In your statement of profit or loss account, you need to get your net profit. To get your net profit, it is gross profit minus overheads. So part of your overheads or your expenditure is depreciation. So which simply means whatever your gross profit is, you take away depreciation to get what? Your net profit. Are you guys with me? Do you get that? Now your questions.
What is the gross profit?
Gross profit is sales minus cost of sales, which is the profit made before other expenses. The profits made before other expenses. This is the profit you make on what you sell, minus your expenses. So when you buy a product now, as soon as you buy a product, the amount you sell the product is it's expected that you sell it more than your selling cost price. The amount you make in selling it is your gross profit. Now you have to take expenses away, because if you don't take expenses away, you'll be overstating your profit. Oh, let's assume now I purchased this marker for $5. Let's use euros, okay? I purchased it for €5. I sold it for €7. So my profit is €2, right? Yes or no?
That is the gross profit.
That is the gross profit. Now I have to put in mind that in the cost of me purchasing this thing, there was transportation cost. There was electricity bill I have to pay. There is rent I have to pay. All these are expenses that I have to take away from the gross profit to get the net profit. So part of the expenses you are taking away is the depreciation charge. So depreciation is an expense for the business because you are using the machine. As soon as you are using the machine, the value of the machine starts dropping. You have to start putting certain amount of money separately to know that you are using the machine to do the job. So here, in year 5, the machine is done. Can you charge depreciation on the profit of the machine that is not working anymore? No.
Mr.
Yeah.
Why are we paying 7,500 each year?
Yeah, because in straight line, we have reducing balancing method and we have straight line method when we are calculating depreciation. But each year, because it's a straight line method, it simply means when I started explaining, I said, because we're going to use straight line method, it means depreciation for each year will be constant. It will be constant. It simply means it's fixed for each year that passes by. Any question again? Do we understand this now? So there will not be profit. Profit will not be charged. So your analysis will be profit won't be charged. Sorry, depreciation won't be charged on profit. Depreciation won't be charged on profit in year 5. Clear? Please write.